Hello students, in present video I am going to explain about 13th problem from final accounts topic. I am taking this question from Inter's first year Telugu Academy Telangana State Accountancy textbook. Let us see the question first. In final accounts, first we have to prepare trading account and profit and loss account. Then balance sheet. Trading account, profit and loss account of Srivastava Traders for the year ended 31st December 2018. Debit side, credit side. In trial balance, cash, asset, not here. So trading account debit side, direct expenses and losses. Credit side, direct incomes, direct profits we should show now. Direct expenditure means up to manufacturing expenditure. Manufacture related expenditure. Direct income means main income, sales. Cash, opening stock, trading account debit side. To opening stock, 2100. Wages, to workers we pay. Workers work in factory means this is manufacture related expenditure. Direct expenditure, trading account debit side. To wages, 700. Carriage on purchases. Carriage means transport. On purchases means we are buying raw material and from supplier's place to our factory. To bring that material, we spend transport charges. After bringing the material, we manufacture. This is direct expenditure, trading account debit side. To carriage on purchases, 600 rupees. Carriage on sale, not here. Audit fees, drawings, debtors, freight. Freight is also transport expenditure, but for a long distance. So for short distance, if you pay transport expenditure, that is called carriage. For long distance, suppose from other country we are importing, and in that import process, we pay transport charges. It is known as freight. So we are importing raw material. After bringing that material, we manufacture now. Means freight also manufacture related expenditure. Direct expenditure, trading account debit side. To freight, 700 rupees. Loose tools, building, power and fuel. So in manufacturing process, we use power and fuel. Direct expenditure. To power and fuel, 500 rupees. Salaries, purchases. Purchase is direct expenditure now. Debit side, to purchases. Credit side, purchase returns are given. Therefore, purchases amount in inner column, 10,000 rupees minus returns. Credit amount, purchase returns 500 rupees. Net amount in outer column, 9,500. Sales returns, goodwill, patents, postage stamps, capital, creditors, interest received in advance, bills payable, bank overdraft, sales, rent received, purchase returns, bad debt reserve. All are completed. Credit side, sales. Sales amount 16,000. By sales. Sales returns are given. Therefore, sales amount in inner column. Returns we have to subtract. Minus returns, 1,000 rupees. In outer column, 15,000 rupees. Adjustments. Closing stock value. Opening stock debit side we wrote now. Closing stock credit side. But before writing that, there is another adjustment. Adjustment number 6. Goods worth of 2,000 distributed as free samples. So firm is distributing 2,000 worth of goods to customers as a free sample. One type of advertisement. See, there are two accounting treatments for this. First one, we purchased goods. No? From purchased goods only, we are distributing some goods as free sample. Therefore, purchase value reduces. So from purchases, we can subtract free sample 2,000. Otherwise, credit side, by goods distributed as free sample 2,000 we can write. In two cases, gross profit will be the same, but which one I prefer is credit side. Because if you show on credit side, then clearly we are maintaining a discrimination between ordinary sale and the goods distributed as free sample. So credit side I am writing buy goods distributed as free sample 2000 rupees. Finally closing stock. Buy closing stock 6000 rupees. Everything is completed. Finally find out the totals of two sides. Credit side total 23,000 rupees. Debit side total 14,100. Income is more than expenditure. Therefore, difference is profit. Debit side total is less. Debit side you have to show this profit 8,900. For this you have to write 2 gross profit. Two sides highest total we should write. Credit total 23,000 rupees. Trading account is completed. Continuation profit and loss account. By taking this gross profit on credit side, we should continue with profit and loss account. First, take a screenshot of trading account. Now, profit and loss account. Credit side, buy gross profit 8,900. Rules, debit side indirect expenses, indirect losses we should show. Means after manufacturing expenditure. Credit side, indirect incomes, indirect gains. Means other incomes. Main income is sales now, other incomes on credit side. Cash, opening stock, wages, carriage on purchases, carriage on sales. So we manufacture the good and from our showroom to customer's house, we are giving free home delivery facility. We incur the transport expenditure. So after manufacturing expenditure means indirect expenditure, profit and loss account debit side. 2. Carriage on sales 400 rupees. Audit fees, verification of accounts. To CA we paid. Indirect expenditure debit side. 2. Audit fees 800 rupees. Drawings, debtors, related to debtors, adjustments. Fourth point, provide reserve for doubtful debt 5% and create provision for discount on debtors 2%. In trial balance, bad debt reserve is given, bad debt is not given. In trial balance, bad debt reserve is there. In adjustment, bad debt reserve is there. And in adjustment, discount on debtors is also there. First, bad debt reserve. Trial balance, bad debt reserve amount is 2000 rupees. Adjustment, bad debt reserve amount is not given, percentage is given 5%. On debtors we have to calculate. Debtor value 15,000 rupees. On 15,000, 5%. 750 rupees. Meaning is year starting date on 1st January 2018, nothing but last year closing date. We assumed that from debtors 2000 may not come. So last year from profit we kept aside 2000 rupees to meet that bad debt loss 2000 rupees. This year end on 31st December 2018, we are thinking that 750 may not come from debtors. Means the difference 1250 rupees came. Otherwise, we are not having any doubt on that 1250 rupees. So last year unnecessarily 1250 extra we have provided as provision for bad debt. From profit we have removed that money. Not necessary. Therefore in current year to current year profit that 1250 again we should add. So profit and loss account is a nominal account. Debit side expenses and losses we are showing. Because of that profit decreases. Credit side incomes gains we are showing. Because of that profit increases. Now 1250 I want to add to profit. Then profit increases. Means 1250 credit side I should show. So credit side provision for bad debt comes. In adjustments he is using reserve for doubtful debt words now. We will also use the same. Reserve for doubtful debts. First trial balance amount 2000 rupees minus adjustment amount. How this 750 came? On debtors 5%. 750. To profit of current year, extra amount 1250 we should add now. This 1250 in outer column. How to remember this? Trial balance amount is more than adjustment amount. In that case, the difference credit side of P&L account we have to show. Suppose adjustment provision for bad debt is more than trial balance provision for bad debt. Then the difference debit side we should show. So remember, when provision for bad debt is given in the trial balance and in adjustment, in profit and loss account, don't show trial balance amount, don't show adjustment amount. Only the difference amount we have to show. Which side? If trial balance amount is more, credit side that difference we should write. If adjustment amount is more, debit side that difference we should write. Next come to provision for discount on debtors. Fourth adjustment. Create provision for discount on debtors 2%. So discount on debtors. Debtor means from them we should receive money. Suppose to one debtor we have given 3 months time. So before 3 months only he cleared that due. So we have to give some encouragement to him. In that case, firm may allow discount to him. To the firm, this is loss. Therefore, profit and loss account debit side. So this is known as discount on debtors. But in question, he is not giving discount on debtor. He is giving provision for discount on debtor. Means on this discount on debtor loss, we are creating a provision. Just like for bad debt loss, we are creating provision. Now the question is, what is the difference between discount on debtor and a provision for discount on debtors? And why we have to provide provision for discount on debtors? Current year is from 1st January 2018 to 31st December 2018. Suppose in current year on 1st December 2018, firm has sold goods to one debtor for 10,000 rupees. Means credit sale. So customer is asking 3 months time. Then payment date is 1st December 2018. December totally completed. Then January 2019. February 2019. So February ending 2019 is the payment date, no? December, January, February, 3 months. Assume that customer has cleared this amount on 1st February 2019 only. Means 1 month before only he paid this amount. To encourage that customer, sometimes firm's policy is firm gives discount to them. So for early payments, firm's policy is they allow discount to customers so that customers will try to clear their amounts as early as possible. Here, this discount is a loss to firm. Assume firm is allowing 500 rupees discount to customer. Here, sales income is generated in 2018 year. Related to that income, loss is in 2019 year. What matching concept says? So in which year you are showing income, that income related expenses and losses you have to show in the same year. So income we are showing in 2018. Then it is better to show the income related expenses and losses in 2018 year only. But discount is allowed in 2019 year. So it is against to matching concept. If you show discount in 2019 year, that is not correct as per matching concept. Therefore, instead of showing 500 discount in 2019, in 2018 only, as a provision for discount on debtors, if we show this 500, it is correct as per matching concept. So when firm maintains provision for discount on debtors, sales are made in current year, but in next year firm is going to give discount to the customer. In that case, in current year, the discount amount we show in the form of provision for discount on debtors. Firm is giving to customer now. means to the firm this is loss. Loss means debit side. So finally provision for discount on debtors, profit and loss account debit side we have to show. 2. Provision for discount on debtors. First debtors value 15,000 rupees. But we should not directly calculate provision on this 15,000 because reserve for doubtful debt is also there. Which amount we should deduct? Adjustment amount. So 750. First you have to remove that. Minus 750. Then the remaining debtor value is 14,250. This is the net debtor value. On this provision for discount on debtors we should calculate 2%. 2 by 100. 0, 0. 2 ones are 2 fives are 5 ones are 5 twos are 10, 4 5 eights are 40, 2 5 fives are 25, 285 in outer column. So debtor adjustment is completed. Next, freight completed. Loose tools, building. So related to building there is one adjustment. Depreciation on building 10%. So fixed asset value is decreasing. Expenditure, debit side of profit and loss account. To depreciation on building. Building value 11,000. On that depreciation rate 10%. 1,100 in outer column. Buildings over. Power and fuel. Salaries. Salary to employees we pay. They work in office, means indirect expenditure. Debit side. 2 salaries. Adjustment is given, therefore amount in inner column 850 rupees. Adjustment number 2. Outstanding salary we have to pay, means we should add plus outstanding 450 rupees. Total in outer column 1300 rupees. So come to trial balance. Salaries completed, purchases, sales return, goodwill, patents, postage and stamps, indirect expenditure, profit and loss account debit side. 2 postage and stamps 850 rupees. Capital, creditors, interest received in advance, not here. Bills payable, bank overdraft, sales, rent received, income, indirect income, credit side. By rent received 2,600. Purchase returns, bad debt reserve. Come to adjustments. Closing stock, not here. Outstanding salaries completed. Interest on drawings. In 10th problem, I have explained the concept clearly. So video link is available in the description box. Interest on drawings, owner should pay to the firm. To the firm, this is an income. So credit side. By interest on drawings. On drawings, you have to calculate drawings amount 4,500. On that 10% interest 450 rupees in outer column. Fourth bit completed. Provide reserve for doubtful debt 5% and create provision for discount on debtors 2%. Fifth, depreciation on building over. Sixth, goods worth 2,000 rupees distributed as free sample. So in trading account, one time we have shown credit side. Second time in profit and loss account debit side we should show, because it is one type of advertisement expenditure. Debit side. 2. Goods distributed as free sample. Amount 2,000 rupees. Generally, second time adjustment we show in balance sheet, no? But this one in balance sheet it doesn't come. Only in trading account and profit and loss account we have to show this. Everything is completed. Finally, find out the totals of two sides. Credit total 13,200 minus debit total 6,735. Difference 6,465. Debit side total is less. So debit side we should write this answer. 6,465. Income is more than expenditure now. Therefore answer is profit. To net profit. Two sides, highest total we should write. credit total 13,200. With this, profit and loss account is completed. Next, balance sheet. Balance sheet of Srivastava Traders as on 31st December 2018. Liabilities amount, assets amount. Cash, asset 4,000 rupees. Opening stock, wages, carriage on purchases, carriage on sale, audit fee, drawings, debtors, asset in inner column because two adjustments are there. First adjustment, reserve for doubtful debt. You have to subtract no? Which amount? Adjustment amount 750 rupees minus reserve for doubtful debts 750, 14,250 in inner column. Next, provision for discount on debtors. In profit and loss account, we have calculated 285 km. Remaining amount in outer column 13,965. Next, loose tools means small and portable tools which are used to repair machinery, furniture, etc. For example, screwdriver, wrenches, hammer. So these tools also we use for a long period, means it comes under fixed asset. Asset side, loose tools 6,500. Buildings, asset, depreciation is there, therefore amount in inner column 11,000 rupees minus depreciation. In profit and loss account we have calculated 1,100. Difference in outer column. So after completing the problem, I have noticed one small correction. That is, building minus depreciation. Amount is not 10,900. This is 9,900. Okay. Power and fuel, salaries, purchases, sales returns, goodwill means reputation, name and fame, intangible asset 7,500. Patents. About this asset, in 12th problem I have explained clearly. Patent is an asset 5,000 rupees. Postage and stamps, capital, creditors, interest received and okay. So asset side completed. Come to liability side. Capital, at the end we will show that. Creditor, liability 5,000 rupees. Interest received in advance. Next year income now only we received. Without giving benefit to others, we received money. So we are liable to them. It is a liability. Liability side. Interest received in advance 250 rupees. Bills payable, liability 2,650. Bank overdraft, liability. From bank we have taken loan 3,000 rupees. Sales, rent received, purchase returns, bad debt reserve. Come to adjustments, closing stock. At the end we will show that. Outstanding salaries, we have to pay no liability 450 rupees. Interest on drawings, to capital we will adjust this. Fourth adjustment completed, reserve for doubtful debt, provision for discount on debtors. Depreciation on building completed. Goods worth 2,000 distributed as free samples completed. Finally, asset side closing stock 6,000 rupees. Liability side capital 40,000 rupees in inner column. Three amounts we should adjust. First one, profit and loss account answer, net profit. Second one, drawings. Third one, interest on drawings. So drawings, interest on drawings we have to subtract. Net profit we should add. First we will add net profit. Profit and loss account answer 6,465 total. From this, first you subtract drawings. Drawings amount is given in trial balance now 4,500 rupees. 41,965. Next, interest on drawings we have to subtract. Minus interest on drawings 450 rupees. In profit and loss account we have calculated. Net amount in outer column 41,550 rupees. So after completing the problem, I have noticed one small correction. That is, building minus depreciation. Amount is not 10,900. This is 9,900. Okay. Now take a screenshot of this. So hope this video is helpful to you. Thank you. Hope this video is helpful to you. Thank you.